Hi everyone, welcome to our first session for tonight. We have Victor from bitcurate who is going to do a quick tutorial on how to actually do DeFi. We have Victor from bitcurate who is going to do a quick tutorial on how to actually do DeFi. We have Victor from bitcurate who is going to do a quick tutorial. Yep. Okay, so sorry about that. There was a bit of an echo. Without further ado, let's welcome Victor from bitcurate. Hi, Victor.
Hey, hello. Hi, Leslie. Good to speak to you again. Seems that every week we got to share more about DeFi.
Yeah, thanks for volunteering to teach the noobs a bit tutorial. So before we do any DeFi, we always do this disclaimer, right? So everyone, please take note that DeFi is new; it's experimental at this point of time. Victor has kindly wanting to educate the space to help the people, especially the newbies, as to what DeFi is actually, which is part of the crypto movement. Now, please take note that it's experimental and there are high risks involved if you do not know what you're doing. So please don't take our word for it. You need to do your own due diligence. What we can do is to educate you guys more onto what is the right way to go about purchasing the tokens, if there is, or how to even analyze the tokens per se. So we've got something very exciting because Victor has shown me the slides. I myself, I'm going to be a student today. So yeah, without further ado, Victor, you can take over. Yeah.
Okay. Hey, everyone. So glad to join this session. We are trying to educate the space, right? And we wanted to make sure that everyone get to learn about what is the latest innovation that is happening in DeFi and of course in crypto, right? So one of the key things that is happening for the last couple of months is actually the emergence of DeFi. Something called yield farming, something called about what is DeFi, and of course even a lot of crypto OGs or even people who are familiar with crypto space like Bitcoin or Ethereum, they are actually even confused, like what the hell is DeFi and how is this different from crypto, and how am I going to participate in DeFi, right? So I mean, I'll be doing kind of like a very basic introduction course about what are the DeFi, what are components of DeFi, what are smart contracts, what are distributed decentralized apps, and of course what are the players in the DeFi space, right? So some background about myself first. So I'm the CEO and founder for bitcurate.com, if you can see from my screen name. So we are all-in-one crypto analytics, using data from blockchain, monitoring transactions. We also tap into the global news sentiment and try to understand what is happening in the global space in terms of the news and social media. And of course, you also track the top exchanges, cryptocurrencies trading volume and order books analysis. So, I mean, the reason why we do that is because we want to bring in more data, right? So it's unbiased and useful for crypto traders. And I've been in this space for the last couple of years, and I've seen up and downs, the scams, and of course, the a lot of things that is happening in the space. But we also know that this technology is new and require a lot of education. So I think one of the purpose of me here today is to share the latest trend happening in crypto space, right, which is DeFi. So I'm going to share my screen now, and then we'll walk through the screen one by one. Okay, so I think we are looking at the screen. So let me go, step by step. So today our session is not about, what is Decentralized Finance 101 and DeFi for beginners. So let's do some basic introduction, right? We think that DeFi is the evolution of crypto. I would say that it's crypto 2.0 or 3.0. So I mean, let's look at what this means, right? If you look at the traditional financial system, you can see that there's actually a user, going through intermediaries such as banks or financial institution. And of course, all these gateways, right, are in the middle. We are talking about Visa, we are talking about payment provider. And then after that, you have to go through another payment gateway again to actually release the funds or the money to the person B, right? But if you look at how decentralized finance works now, it's actually straightforward. The user A, or we just name it as Adam, right? When he wanted to transfer some money to like the second person, we call this Annie. So Adam would just need to interact with the smart contract or the Ethereum blockchain system or DeFi, and we are able to process all of it through this system to Annie in a matter of minutes and seconds, right? So DeFi actually provides all the financial, systems that you need for the financial institution, replacing banks and the financial institution. So okay, so look at this, right? Going down further. So DeFi users are able to deposit their money into like public blockchains such as Ethereum through different kind of DeFi protocols. And then someone borrows the money or the digital asset, of course, user will be able to earn some interest on the money that they actually deposited in part of the DeFi protocols. So in short, right, these DeFi protocols are trying to replace or try to compete with the banks. There's permissionless, there's no government involved, and no one can actually have a total control over your money. And of course, this will actually create a lot of different conversation, like is this neutrality, or how is my privacy affected by these? Would the hackers or would people online will be able to see the stuff that is happening on chain? And of course, there's also inclusion. A lot of people doesn't have access to banking will suddenly have access to financial systems. And of course, it's actually quite open and transparent so that everyone could actually see what is happening through the blockchain or the smart contract ledger itself, right? This is actually a different new era of usage for cryptocurrency. Okay, so this is to explain it, right? What is the real core differentiator of like centralized exchanges or versus DeFi? Right? A lot of people kind of confused. In the traditional crypto 1.0, a lot of the one that we get used to, generally how it works is that you are actually holding, let's say, Bitcoin, right? And the only two things you can do with it, right, is actually to hold it in hope for capital appreciation. So for example, let's say you bought it at like 3,000 US dollar from like 1.5 years ago. Then you if you want to make profit on it, the only way that you can actually profit from it, right, is to hope that it increase to like 6,000, right, and then you're able to sell it for like 100% profit. That is capital appreciation. And of course, the other part is what the traders have been doing and have been doing in centralized exchanges as well. So they are literally trading among different peers on the exchanges, which is why you can see there's a lot of crypto exchanges popping up in the last couple of years, right? Traders actually use different cryptocurrencies and trade among each other and hope to make profit. So that was actually how the crypto 1.0 work as well. Of course, there are other usages such as you're able to transfer money overseas. People can transfer peer-to-peer. I mean, those are the basic usages of crypto anyway. So how is it different from DeFi? So if you look at it, right, the first thing is that if you are transacting through centralized exchanges or crypto exchanges such as Binance or Coinbase or Huobi or any other centralized exchanges, right, users got to trust the people behind the business of the centralized exchanges to ethically manage their fund and carry out the services. Of course, this comes with a risk. That is why a lot of people wanted regulation and make sure that their money does not run away. We have heard stories before of like different exchanges got hacked and then their money just disappeared. We also know that there's a lot of exchanges whereby the owner of the exchange decided to close it down and just take the money and run away, right? So you got to trust that centralized entity not to do that. Of course, if it's regulated, you know that at least they are a real legit centralized exchange, and then you trust in them, right? So that is how the centralized exchange are being operated so far. So on DeFi, the difference is that you got to trust the technology that functions as intended to execute the service that is offered. For example, if you were to lend your own capital or your Bitcoin, right, into a DeFi protocol, you just trust the code itself to do the transaction on behalf of yourself. So instead of depending on the centralized exchange to do that for you, right now you are able to do that on the smart contract, on the code itself, on the Ethereum blockchain. So it is actually transparent on the blockchain and it's immutable. So they actually create a little bit of safety in the sense that it's less. I mean, there will be of course issues down the road, or there are some hacks here and there, but it's actually more transparent, right? And you remove that centralized entity from the process itself. Going forward, if you look at it, the biggest differences, in my opinion, right, looking through this, understanding this DeFi, is actually there are three parts to this. First of all, it's actually non-custodial. If you look at this description, right, what does non-custodial means, right? As I mentioned, imagine today if I wanted to transfer to do something with the Bitcoin, I got to transfer this Bitcoin to somebody's wallet, right, from party A to party B, and that itself, right, created the risk because somebody need to hold custody of your capital, of your money, of your Bitcoin. So in DeFi, right, that is actually non-custodial. The user only need to interact through their own wallet, digital wallet, crypto wallet, to the smart contract. So this smart contract will be able to execute through your wallet without going through the intermediary. So you actually reduce your second differentiator, the counterparty risk. So the capital stays on a smart contract, not on somebody else's wallet. We heard of these stories before, right, during the ICO days or during the previous crypto days, right? You literally, investors just transfer their capital to a new project and hope that this project will take their money and start to do some the development on the protocol as intended. But a lot of investors actually got cheated, right? And then the founder or like the project owner take the money and they run away, right? They scam the investors' money. So counterparty risk is reduced because the capital stays on smart contract and not on somebody else's wallet. That itself, right, is really reduce the risk for you. And of course, governance. The why DeFi actually pick up for the last couple of months is because of governance. What do I mean by that, right? A lot of DeFi protocols still operate on centralized entity. I'm not going to beat the bush and say that, hey, bitcurate is not a decentralized, protocol. We are not. We are actually a startup. So a lot of DeFi protocols, right, they are offering governance token or governance ability so that the community or the people are holding the specific governance token able to share a voice or make a decision on the governance policies that determine how the protocol could behave, could do, could improve. This itself, right, is what the mantra of decentralized DeFi anyway, because you're offering something that the community or your token holders who are able to actually make decision on behalf of that DeFi protocol. That is actually the biggest differentiator among centralized entity. For example, right now, even though you are holding BNB token, right, you literally can't tell CZ what to do because they are a centralized exchange. They will make decision on behalf of their company to decide how they are going to deploy the capital and how they're going to do business. But in DeFi, this is actually determined by the community itself, right? They're going to vote for it, they're going to approve for it, and everything is based on that token and the voting system. So this is the biggest differentiator in the DeFi space. Going forward, so what are the benefits of DeFi and holding crypto for capital instead of just holding crypto for capital appreciation? Centralized exchanges offer, trading and holding. Some of them offering staking and very little bit of lending. But DeFi can provide you much more than that. If you look at it, right, these are the stuff that is happening on the DeFi space, right? There is actually a lot of protocol which I'll be sharing later. They are providing asset management. You're actually putting the capital in there, and then they will invest behalf of you, and then they will provide you interest based on the investment return. That is actually kind of like new into the DeFi space. Then of course there is actually protocol who are doing lending and borrowing service. You can actually literally put in some capital, and then you can take some you put in some collateral. You're able to borrow and lend and get interest and pay interest for it. So right now you can actually take some capital to do some trading. You can do more with it instead of using your own capital to trade. And of course there's also automated market makers. Instead of depending on investment bank or people with money to do marketing for the exchange, now you can be part of the market making to make money from people transacting with you. So that is what market maker does. And of course, there's also emergence of insurance. There's insurance actually happening right now. You can actually buy insurance or smart contract, and then if there's a payout, the community or the insurer will actually decide to pay you out. And of course, there's stable coins, there's decentralized exchanges, and there's also derivatives on DeFi. So if you can see, right, there's a lot of happening that is actually happening on DeFi. And all of this actually happens through innovation and through the main things I was in the previous slide, which is the custodial, counterparty risk, and of course, leveraging all these different innovative tools on DeFi space to help the industry to grow. So what are the decentralized layer of DeFi? the power of Ethereum network, what is smart contract and dApps. So what is a Ethereum smart contract? I mean, that being said, I'm just using Ethereum as an analogy because Ethereum is actually the leading DeFi protocol. I mean, there are certain mainnet or some other chains are trying to catch up. For example, Tron just started their own DeFi network, and the Binance Smart Chain was just launched like last week or 2 weeks ago. They are encouraging a lot of people to actually develop DeFi application on their own chain. So Ethereum chain itself actually has the most activities in terms of DeFi and smart contract. So what does it mean by that, right? So smart contract is essentially a collection and a piece of code that is running on Ethereum blockchain on smart contract. It can control valuable things and execute contracts such as ETH or any other ERC20 digital tokens. It has the goal of using blockchain to replace internet third parties, right? Those who are storing data, you can actually transfer mortgages and keep track of what is happening in the financial instruments. So I'm going to explain more. Smart contract is essentially, right, the code that investors or people who are interacting in DeFi are interacting with. Instead of interacting with the bank, you're actually interacting with the smart contract. So the smart contract itself is responsible for connecting lenders and borrowers, detect the loan terms, distribute the interest. Everything is actually happening on a smart contract. So, and because we know that everything that's happened on smart contract is immutable, you can't change it unless you really hack Ethereum blockchain. And everything is transparent on the blockchain. You can really literally look at code and know what is happening there. So smart contract is online. So you're actually interacting with, and you'll be able to execute whatever contract or whatever rules and logic on the Ethereum EVM, and then you're able to execute the function or the value that you intend to do, such as the decentralized finance. So what are dApps, right? Decentralized applications on a short-term dApps. That is what the definition of it. So apps actually interact with blockchain technology. So these dApps are actually open source. All these source code are available online and on GitHub, on different repository. Developers could actually go in there, verify, use, copy, and modify the code. That is how this industry is evolving. A lot of all these codes are actually open source, right? Everything is transparent online. You can literally do your own smart contract audit on the source code itself. That is how investors and developers are looking at it. Of course, it's also decentralized. It's not controlled by one single entity or authority. So it's maintained by a lot of users or the project owners, or the nodes, right? So it's purely decentralized. And it's cryptographically secure. So it's protected by cryptography. The data is recorded and maintained in the public blockchain. There's no one single point of failure. Those are the benefits of Ethereum blockchain anyway. And of course, because of this, the project or the DeFi protocol could offer incentives. There will be a digital token or digital asset, encourage users and developers to use their protocol. So let's look at two of the innovation that is happening on the DeFi, right? That is actually quite astounding. One of the things is actually called flash loan. Actually, I was explaining this to Leslie and the rest, I think, like 2 weeks ago. Yeah. Flash loan was a new feature that was introduced, I think, beginning of the year. It was like 8 to 9 months ago by Aave, I think. So what it happened was this. If you look at the chart, and I just go through the description first. So in the real world, for you to get any loan, right, you need to provide collateral. That is the same thing on DeFi as well. You need to provide some form of collateral. You cannot go to somebody and say, I want to borrow, let's say, $1 million worth of loan without providing collateral. Of course, there's also another type of loan, right? We know that it's actually happening in the real world as well. You can actually get a loan from somebody, right, and say that, hey, I'm going to borrow $1 million from you. I'm going to return to you the same day. And then I do not need to provide collateral to you, but because you can trust me or do not trust me, but I will return the same day to you, right? So, of course, there is a risk involved, right? So how does flash loan work is actually an upgrade on top of that. So it's essentially an uncollateralized loan option in DeFi. It enables you to borrow instantly and easily, and you do not need to provide any collateral. Wow, you'll be saying it's so good to be tried. But of course, it comes with a caveat, which I will explain here. The use cases are actually inclusive of arbitrage. You can do arbitrage trading. You can do some collateral swapping. You can solve self-liquidation on MakerDAO. But essentially what happens is that if you're borrowing a flash loan from a protocol such as, let's say, for example, right, in this sense would be Aave, or MakerDAO, you're actually taking a loan from Aave, and then you got to do whatever you need to do, such as a close ETH MakerDAO vault, or you sell the ETH for BAT, and then you open another contract with MakerDAO, and within the same smart contract, and then you return the money to the flash loan contract. So essentially, what happened in this use case, right, is very simple. Right? You're actually writing a smart contract to ask, to get a flash loan that will give you DAI. DAI is the stable coin in MakerDAO. Once you get the money from MakerDAO, once you get the capital flash loan of the DAI, let's say $1 million, right? You don't have $1 million in capital, but you can do and borrow flash loan worth of $1 million that is denominated in DAI, and then 1 million DAI. And then after that, you actually move that money to the closed MakerDAO vault. That is where you actually collateral swapping and close your position. And then you sell that. Once you close the MakerDAO vault, you actually get ETH because your collateral in MakerDAO is actually ETH, and you sell the ETH for BAT. And then from you use the BAT to open BAT vault in MakerDAO, and then after that you close the original loan at $1 million DAI. All of these will happen within one smart contract, which means that all of these actions need to be executed within one smart contract, within one atomic transaction, within one swap, that all of it need to be completed. What if it's not completed, or somewhere down the road there is not enough money, or the exchange rate change? If that were to happen, right, the whole original transaction will revert back to its original, and it will never happen. That is a little bit mind-blowing. You are literally borrowing money from somebody, and you got to execute everything within that same second or the same block in the same transaction. If you are unable to return the money within the same block, the whole thing will actually revert back to original, and the money did not even started to loan to you in the first place. That could not happen in the real world, because in real world, when you borrow money from somebody, somebody need to give you the money. In this sense, right, the flash loan happened, right, you can actually get a loan from DeFi protocols to execute whatever you need to do without putting a collateral, without putting a deposit and down payment. You can do all of this, but in return, you need to return all the money with a little bit of transaction fees, if there's any, to the original lender at one transaction. This is one of the biggest innovation that happened in this space, like in the beginning of the year.
So Victor, how fast do they need to do this flash loan? You said within one smart contract, within one atomic transaction, that's happening on Ethereum, right? So how fast do they have to do it?
Oh, it's actually everything in one smart contract. So when they write the smart contract itself, all of the actions that is happening here need to be written in the smart contract, in one smart contract, before you deploy the smart contract.
Wow.
So that means, right, as I mentioned, whatever happened here, right, you need to put into the smart contract and deploy it instantly as a single contract. You literally need to do, because it will never happen. You put in a single smart contract, you will loop on it. But as I mentioned, right, what if halfway the money is not enough because of the exchange rate, right? Maybe a certain exchange rate just split, and then you are too slow. And then when you return it, right, it's actually less than what you borrow. Then the whole thing actually never happened, and you revert back to the original, and the transaction actually never happened. It's crazy.
Would you say this is risk-free at the moment? I mean, that's opportunistic, right? Based on this, because it doesn't happen all the time, right? But would you say it's risk-free?
Depending whose side you're on, right? If you're talking about the exchange
Traders.
itself,
let's talk about traders, man.
there's always risk, because you got to pay for the gas fee. Don't forget about it. When you're executing a smart contract, you got to pay for the gas fees, which is why I mentioned last week, right? Gas fees is actually the new alpha, because for you to identify and know your gas fees so you can be profitable, it doesn't matter. Even though if you succeed, right, you make $10, but your gas fees you are paying $50. What's the point? Right? You can get a flash loan, but when you do the arbitrage between different currency or stuff, you do whatever you need to do. Let's say you profit $100, yeah, I make some money. But your gas fees, you're spending $200. Yeah. Who is the one that makes money? Yeah. You, the lender, or the miners? So gas fees is actually the differentiator now.
Okay, thanks. Okay.
No problem. Continuing, another innovation that is happening last month, a credit delegation by Aave. So it's really mind-blowing to see how the innovation that is happening. And this is not even the latest one. No, the latest there is actually more innovation, but this
Yeah,
one was
we're
happening
gonna
last month.
yeah, we're gonna talk about this later in our session at 9 o'clock. Yeah.
Yep.
Yeah.
So in this case, right, just imagine we discussed this before. Look at the chart, right? You look at the image here. So you can see that Chad, right, actually is the benefactor. So imagine this, right? Chad is a real person in the world, decided to do something and needs some facility from the bank. But because he doesn't have a credit history, he doesn't have a good track record, or maybe he doesn't have a banking account, he are unable to do all of that because he doesn't have a record with the bank, right? The bank will think that he's too risky to borrow to him. It happens all the time in any financial institution around the world. That is how bank works, right? They control the risk. So in this sense, what happened is that any two parties can enter into a trusted agreement where the depositors, which is Karen, deposit the money into the blockchain itself. And then because he trusts Chad, and then the money could be borrowed by the counterparty, which is Chad. And then Chad do not need to provide the deposit onto the smart contract. And in this case, the credit delegation will enable the liquidity sourcing into a traditional finance. It's like guarantor in the real world on the smart contract.
Yeah.
So
amazing.
Karen, for example, some Chad, right? He's a relative of Karen and he trusts Chad, and then no bank or DeFi want to borrow the Chad because he doesn't have money or whatever reasons. Then Karen say, hey, take 1 ETH for you to do whatever you need to do, either trading, do some stuff. I'm going to be a guarantor for that credit delegation. And then as long as you return the money, and then I'll be safe. So that is the latest innovation from Harvey. Okay, moving on forward. So what are the DeFi protocols in the market? So what are the different types of DeFi available today? I'll just briefly walk you through. I will not go everything into detail because there's a lot of differences. So the first one, stablecoin. As I mentioned previously, so DAI was one of the original stablecoins, same with USDT. So what the function of stablecoin is, they are actually essentially ERC20 tokens, but backed by certain things. DAI is actually backed by MakerDAO Vault, that is the equivalent amount of Ethereum that actually able to mint at a certain percentage of DAI. USDC is backed by a consortium led by Circle in the US. UST, TUSD, USDT. Stablecoin essentially means that you peg to $1, supposedly, but there will be some differences in the exchange rate. Next, lending and borrowing. If you look at it, right, lending and borrowing happening on the DeFi as well. If you look at it, it's just the amount of innovation is crazy. So Aave, Compound, Fulcrum, DeFi Cream, MakerDAO, Yen Finance, all these are different kind of protocol. They are offering DeFi protocol. They are actually offering lending and borrowing facility on the smart contract on Ethereum blockchain. So as I mentioned, right, users or traders or investors, right, could deposit money and lend the money to the protocol, and they'll get some interest in return. And then the borrowers will be borrowing this facility to actually do trading on their own, and then they'll return the interest and the capital to the smart contract, and then the lenders will get the interest. So essentially, that is how lending and borrowing works in the real world anyway. Except this is more efficient, removing a lot of all this centralized party and inefficiency, right? That's how bank makes money. So in this case, right, this protocol are actually decentralized on the smart contract, which is why the facility they offer is actually more efficient and lower in interest.
In fact, their tokens are just utilization only, basically, right? It's not even like really lending and borrowing. It's just smart contracts on their protocol that's determining the lending rates and the borrowing rates only, basically. So yeah,
that is one.
Really cool, man. Yeah.
And another one is actually the governance token. Like Compound have their own token called Com. It's actually to govern the how the Compound works.
Well, I see Cream, which is the latest one. Guys, if you do not know, Victor is doing this live, and this is like the latest. Crypto is always in the space. If you sleep one night, that's it. Like 5 days just gone past. Because of the speed. And Victor has been so kind enough to even give us an updated on the scene. Because when I see Cream, this is as of now. This is the latest. I think it's only a few days old, basically. So, yeah.
The innovation is just crazy.
Yeah, madness, man. Yeah.
Going on forward, you look at this, you look at here, right? The decentralized exchanges is just mind-blowing for the last 9 months, right? The first one, Uniswap, is of course one of the biggest decentralized exchange. Market makers, automated market makers, and the traders are trading between different tokens on Uniswap. SushiSwap was just started like, I don't know, less than a month.
Yeah.
And today they are like worth hundreds of billions, right? Worth of deposit in there. Balancer was started a couple of months.
Yeah.
And then Curve is also another one that is very interesting. It's actually a decentralized exchanges on stable coins that is actually more efficient than Uniswap. 1 inch is another one.
I think the rest of this Balancer has a very interesting concept, which I'm still trying to get my mind wrapped around it, like creation of pools, actually, basically. But I guess that's another session. We'll go into it. We'll talk more on that. But guys, do take note. Balancer you can actually create your own pools, basically, which is quite cool, actually. Yeah, I kind of like the idea that you can actually gather a few friends and come together and offer some rates or even percentages in terms of how you want to actually pool your resources together, basically. So it's actually very cool. Yeah. Sorry, man.
So you become your own market maker on Balancer.
Exactly, man.
Yeah, was the job of investment bank. You actually become the investment bank yourself.
Yeah. This is really awesome. Yeah.
Okay, going on forward, you look at derivatives. I mean, derivatives are actually, we could say that DeFi is actually a derivative on the crypto world, right? I would say the same thing. So it's similar, right? So these are the different type of protocols, synthetics, Algo, UMA, all of these are actually still new. And the derivative are actually of course, the biggest is synthetics, right? It's one of the most famous in the DeFi space. So you are literally creating a derivative of a certain asset on synthetic exchange that you can actually bet with somebody, right, whether it's going to happen or not, and somebody will take your position. It's quite advanced.
Yeah.
Okay, next fund managers, these are also the new ones, right? There's a lot of component to it. So you can see right in here, there is actually Yin, I think it's not here, but you can see a lot of all these are actually managing your assets, and then you invest for you, to trade against you. Literally, this is actually fund managing, right? InstoDebt is actually a brokerage, Zapper, DeFi Saver, Stat, Zerion. These are actually all tools that helps crypto DeFi traders to actually manage their portfolio. They're able to allocate their funds into different protocols to get interest and return. So many happening in the DeFi space.
Yeah, man.
Zero. So insurance, mutual.
This is totally new. Yeah, this is totally new, man. Yeah.
So Nexus Mutual, they have their own native token. It's called NXM. You can check it out on DeFi Pulse. So I think they rank like 15. I think they have a total locked asset value of around 22 million as of this afternoon. So people should deposit their money there, right? Which means that Nexus Mutual have like 22 million to cover any losses, right? Technically, I think that is how it looks in their protocol. I need to research more. But my point is, insurance is really happening on the DeFi space, right? How do they cover, or what situation is depending on their smart contract or their DeFi protocol. What Nexus Mutual do is actually they're offering certain kind of protection for crypto traders or DeFi traders in case their original capital hack, if it's a public one, especially we know that smart contract hack is not new. A lot of times it will just happen, right, because of bugs or stuff. Nexus Mutual will actually allocate and reimburse that compensation via their pool if you have submit for insurance in the first place. So it's an innovation.
I guess if you are a very serious trader, insurance would, and you do want to tackle the DeFi new experimental projects, right? Some form of insurance. I mean, if I were a serious trader, I would use the insurance as well, because if you're gonna invest like tens over millions, or no, sorry, 10 over thousands, 100 over thousands, basically for on Ethereum itself, and the insurance will probably just cost you a fraction of the price. You want some form of protection, and I guess this is because it's so new. I guess this is where the space, like you say, the innovation is going to just keep on growing. So stay tuned, guys. We are in a very exciting space for the DeFi side. I'm very fortunate to have Victor as well to come in and give us all these insights on these very various companies and projects, basically. Thanks, Victor. Yep.
Yeah, no problem. So the summary and Q&A, I want to keep it short, right? So it's a beginner session. We're not going to deep dive too much towards how it works. But in short, let's do these 5 pointers and run it. So decentralized exchange or DeFi is actually nascent and new, but it is already showing its potential to change how value transfer works in traditional finance, right? In traditional finance, you got to go through intermediary. That was the original purpose of crypto. You want to remove the trustee, and then they were able to transfer the value of the money to each other in Bitcoin. But right now, DeFi is actually fulfilling that prophecy of that you can actually borrow and lend without banks. That is how decentralized finance are supposed to work. That is the value of it. And of course, innovative products are launched regularly, as we have shown here. Flash loans, credit delegation, automated market makers, all of these are actually new terms, but if you try to understand how it works, it's quite similar to how it happens in traditional finance. It's just the words are different and the mechanics is slightly different. For example, flash loan, it is very hard to happen in the traditional finance, but it could happen on a smart contract. So those are the innovations.
Yeah, that's true. That's true. Yeah.
And then it works as dApps, smart contract on the blockchain network. And of course, the biggest is being Ethereum network so far, which is why all the monies are in Ethereum so far. And of course, it's actually evolving, right? Some of them are going to a different network. Some of them are going to a L2 network that is faster and less expensive from the gas fees. I think one thing we have to say that many copies of these similar protocols are and will be launched regularly currently and in the future. So, for example, right, Uniswap is the biggest, was the biggest, and I think it's still the biggest. But out of nowhere, SushiSwap decided to launch it, and then you become a competitor, and 99% of the code is similar. It's just the way of them executing the model itself is different because they are giving 0.05% of the transaction fees to the Sushi token holders. So it's just basically that slightly changed, right? They have really launched a new product. So many of these copies will happen in DeFi space. We would argue the same on the traditional startup as well. If you think about it, how many digital mobile wallet that we have in Singapore, in Malaysia, in Southeast Asia, and globally? There's so many of them. Grab is launching their own wallet. PayPal we have wallet. Then you have a different food payment processor wallet, and even food delivery. How many of them? Right? And what are they offering? It's just slightly different. So many of these copies will happen in the same thing in the DeFi as well. The only difference is that DeFi is much more quicker because it's easier to copy because all the codes are transparent online, right? And that being said, we want to wrap it up and say that it will be risky, extremely volatile, and expect full of scams. There will be a lot of this thing happening on DeFi. No difference from crypto and no difference from a startup offering you a lot of incentive, but they can't deliver. Please do your own research, know your risk, and we are not here giving you financial advice. Please do your own research, know your risk, so that you can learn and try not to lose your capital.
Yep. I think that's great advice. Yeah. We have a question actually. So I guess this was already answered in terms of DeFi flash loan earlier. You went a bit in depth. And what's the difference between the last ICO trends and this DeFi trend? I think Victor has also briefly made mention about this as well in 2017 when ICO was a big huge thing, and right now we are going through another phase. On this. I think that's about all we have for the questions. If you guys have more questions, I think you can actually try post it in the comments, and we'll try to answer you as much as we can. Do like our channel. Do follow us and subscribe if you just logged in. And this is open and this is to public. This video. We hope to educate the space and make sure that you guys go into the right projects, recommended projects by the professionals in the space itself. My huge thanks to Victor for even considering to giving us this hugely content-packed with most of the DeFi stuff that we are experiencing now. Very insightful knowledge on the flash loans itself. That was a big question actually for me as well. You kind of rest some of my questions as well. Finally, yeah. And I think that's about it. Do join us for the 9 o'clock session where we will have 4 more panelists, like a coffee, we call them uncles, that's joining us for a very, heart-to-heart talk, and hear more about what's happening in DeFi space in the last 1 week itself. There's a lot of things that's happening. Do catch us. We'll probably be speaking about Sushi Swap, what happened, the back ends. We're going to talk about a bit on the latest Aave protocol, or the latest token that Jason is going to doing. Shout out to Jason. Thank you for coming on board to the next session. And last but not least, I'm going to ask questions like DeFi Pulse Index coin token now. Yeah, we're going to have new DeFi coins that's based on an index, which we have briefly talked about previous weeks when we have a Duran index, remember? So do join us at 9 o'clock for a live session with the rest of the guys as well. Appreciate it. Thank you very much.
See you guys later. Thanks.